hey, is it a good market right now? Well, what the answer is, as you know, is it depends. It depends who you are.
It depends on what you're trying to accomplish.
Are you a seller? Are you a buyer? Are you an investor? What are you trying to accomplish? Yep. And so this particular chart was not part of Tina's presentation, although I did grab some slides that we're going to get into. But this chart here, there's some really interesting things I just want to share, just a couple of highlights. Today, I pulled this morning, so really today's August 3rd. This were the stats from yesterday. It shows here that we have active listings in our multiple listing service at 13,000. I actually pulled the MLS, and we're going to show you that's actually a little bit, because in our MLS we can list properties anywhere, you know what I mean? So that number there, when you take out the homes that actually have offers, her chart was showing 8,400 actives. That includes Pinal County, that includes the entire, gamut of Arizona. And we'll do this in just a moment, but when I pulled mine, I got a little bit less numbers, which was even scarier. So there's a trend that we've been going in, and it's talking about the months of supply. 2 years ago, we thought we were at crazy lows. 2.3 months of supply.
Bananas.
Yeah, we thought 2 years ago we were dealing with bananas. In a normal market, when we have equal supply and demand, we should actually have about 4 months of inventory, at least, if not up to 5. Otherwise, it's a seller's market. So we've been in a seller's market straight for at least 5 years now. We had a little blimp of it back in 2014, 15, where it kind of actually went into the buyer's favor for just a minute. Yeah, a minute. But so for the last couple of years, it's been pretty consistent. A year ago, we were at 2.1. Last quarter, because of the quarantine and COVID and that little blink of an eye, we actually increased in volume and inventory. But then last month we hit what we thought was a record of 1.5. Well, guess what? I got this morning and pulled this chart out. We're at 1.3 months of inventory. So what happens, as you know, supply and demand. When it's that out of whack, what happens to our prices, Bernie?
They increase.
They increase. So do you
whether you ask for it or not?
So if you're already owning a home, that's fantastic news. But if you're trying to buy a home, maybe not so much.
Right.
There is definitely some good stuff coming in our update that we're going to talk about. But one thing I want to point out is appreciation right now, 12%.
It's bananas.
That is complete bananas. And so if you've been thinking about investing in real estate, it's not too late. We're going to explain why.
It's never too late.
It's not too late. The Cromford Market Index at the bottom of this chart, this is really telling.
This has been crazy.
Yeah. So last quarter, because we're in the midst of the pandemic, we were at 151 for the Cromford Index. Basically, again, if we're in a normal supply and demand, everything is equal, it should be at 100. So in the last 2 years, we haven't been anywhere close to 100. Again, bananas time. 2 years ago, 163, we thought bananas. A year ago, 186, we thought bananas. But holy cow, last week, Tina had up on her chart Cromford Index of 303, I believe it was. I get up this morning and pull the current. We're at 318.
Right.
So that means there's over 3 buyers per house.
It's crazy.
3 buyers per house.
It is crazy.
Super crazy. So go ahead and slide down to my next screen for me, please.
Well, and that little pop-up in inventory, too, had a lot to do with rentals becoming listings as well. That helped,
The VRBOs that were vacant, all of a sudden the investors decided to sell. This I just pulled this morning because I'm a licensed broker. I can pull what's actually active in our MLS after this crazy weekend. So I don't think Tina's charts have quite caught up yet. So over the weekend, James and I were out showing 5 different buyer clients yesterday alone homes. Like we were sweating in the 117.
Oh
I think I'm hot right now. Oh man, yesterday was brutal. But when I looked in just Maricopa County and Pinal County, just the 2 counties, for single family detached homes, no price point, no nothing, we're less than 6,000 houses this morning.
It's crazy.
Less than 6,000 houses. Okay, guys, I've been doing this for 27 years. During the bottom of the market, when it was like 2011, okay, August 6, 2011, that was actually the bottom of our market here because I'm geeky that way and I know that date. I will always remember that date. We had like 40,000 listings at that time. 40,000. Today we have less than 6. So the name of the game, and this is what I'm telling all my agents and all of our clients, you want to buy, you got to be competitive and you got to be quick.
And you got to be ready. Yeah, you got to be quick.
There's no messing around. You got to be quick.
So if you see it, you better grab it.
You better grab it. So the rest of this chart, I feel like we've kind of set the stage. Bernie, I'm going to have you interject as often as you like. Fry, please go to the next slide because we both were now at this point listening to Tina.
Yes.
So do you remember this slide here?
Yeah, I thought that was amazing in terms of the percentage difference between the total housing units. So even back in the day, we had more houses available for the number of people that needed them, and now we don't have as many houses available for an increase in the number of people that need them or want them.
So really exactly. And then the next slide will show even more. So just before you move on, Fry.
By the way, I didn't get to see any of this stuff beforehand.
Hey, but you watched it last week.
I know.
So basically what happened is in 2006, we had been on the cusp for 6 years of the builders building overbuilding.
Yes.
Overbuilding. So going into the last crash, we had several years of the builders building more homes than what we could live in, than what we really needed. And so at that time, if you were going to buy a brand new home, you were getting deals. They were cheaper than resale. It was fantastic. Then the market started to crash. So 2007, we went down. And then, oh gosh, from 2009 through 2014, the builders are hardly building squat.
Right.
And even today, they are not able to keep up with the demand because there's only so much land.
There's only so much land.
and it takes a few years to entitle that land. Fry, please scroll down to the next slide for me.
It's so funny to think about Arizona, right? And you think about Maricopa County. I'm from the San Francisco Bay Area in California, where there isn't a way to sprawl out.
No.
Like you hit the water, and if you start pushing inland, you're no
build
longer
up.
in the Bay Area, right?
Yeah.
So it's interesting because a lot of people perceive that in Arizona we have so much land grabs still,
Right.
but we really don't have the availability to produce homes as quickly as people would like to see them.
Agreed. So during the beginning of my career, I was really heavy in the new build industry. I still am today. But I literally started here at the beginning of this chart in 1996, 1997 in new home sales. And so when I was selling new home sales for the first 10 years of my career, we had plenty of homes. Plenty of homes. And then the market crashed and the builders started coming back little by little by little. But looking even at 2020 numbers, we were only getting permits of 3,400 versus the 2,700 we were doing in 2004.
That's so crazy.
Or 27,000, like a fraction. So this is why now everybody's moving to Arizona and we haven't kept up building like we should. We have run out of land. Cost to build's way more expensive. Also SB 1270, I believe it was, passed, and we lost a lot of our workers that were building our houses.
Totally. Well, and resources. I mean, water's a big deal. Like if you find some great land out there that you can cultivate, you still have to figure out how to get resources there.
Absolutely. Absolutely. So Fry, next slide, please. And then to boot,
good.
you talk about
this.
No,
you do it. You do it. But this was really, really good. I mean, this was one of those pieces that this is why you can't miss our updates every month, because Tina Tambor brings information that is not like something you could just find in the Cromford files
on your own. So what this slide is, and for those of you guys listening on podcast, because we also podcast the shows, I have a chart showing the population growth here in Phoenix. And so what happened was during 2009, 2011, our population growth was a lot lower than what we're seeing today. So when we had less homes being built and more people coming to town, it's huge. And so we had an inverse of population coming to town versus the number of homes we were building.
Yes. And there's some variety of stats out there, but there's still, supposedly, we still have 250, 300 people moving to Arizona.
Every day.
Every day.
So I did a whole video about the reasons why people move here. You know my number one reason why?
It's because of you?
No.
Oh.
Because your hair looks so much better in Arizona. It's a dry heat. So go ahead, let's go to the next slide.
No, they're all moving here for you.
Of course, right? Okay, so
this was bananas.
Yeah,
too.
this was bananas. Like her whole presentation, guys. So this is talking Cromford Index again, and it shows right there at that equilibrium of 100 where you want to be in a balanced market. Well, in 2019, we were going up, like we explained, right? They're showing 2005. A week ago, 2005, she was saying the Cromford had never hit higher than 312. Do you remember what the first chart slide said?
318.
Yeah.
Yeah.
So we just beat it this last week.
When you said that earlier, I was like, I thought it was 312 was the last time we ever hit that.
But
But I didn't want to say it because I'm like, what if I was wrong on that
No,
number?
you were totally right. So in the last week, we just broke that
I know,
record.
we broke that record.
We broke that record.
This is such a huge graphic to explain why in our market we're not going to see what people are fearful of because of time and trend.
Time and trend. So the thing is what Tina said, and I love this because she proved it with this graph alone.
100%.
So during the original quarantine, I'm getting over here to point because this is like crazy to me. I kept telling all my clients, this is the time. Buy. Everybody was so scared.
Whatever you get your hands on, you better buy it.
Right? And everybody was in that fear mentality. We had people actually canceling contracts in March that I'm sure are kicking themselves today because we had this little tiny dip for a blink of an eye. And then it shot up. So this chart is from a week ago where we're at 302 with that Cromford Index. And so what she was explaining was, look at 2005. It went from 312 all the way down below 100, but it took a year to get there.
Yep.
And she was saying with the volume, the shortage of homes, and the amount of people still moving here because they weren't moving here during that time period, she predicts it will take at least 2 years for it to hit 100. And that's if nobody bought any more real estate. That would, and which is really improbable.
Yeah. Well, in such a different outlying circumstance, right? So you've got people that have equity. You've got people that, I mean, there's lots of different scenarios. And we
don't have the liar loans, which Tara, I'm sure, can talk about in the second half of the show.
Interest rates. I mean, making everything ridiculously affordable.
Under 3? Are you kidding me?
Yeah. But this was probably one of the most, I mean, gosh.
This is one
of the most powerful pieces from that presentation last week.
I agree, because like you just see it, how it just shot right up. And so now we've actually broken the records. If Tina does this chart again, you will see we broke that record from 2005. Next slide, please, Farai.
Great highlights.
I love this show.
You did a really good job.
Well, thank you.
With all this.
Okay, this was another cool thing. If you're talking about or thinking about investing in real estate, it's pretty cool to see this chart because this chart talks about who buys what houses. You know, we had a little blimp of red at the bottom where we were having like Open Door, OfferPad, other iBuyers, as we call them, buying homes, but they're non-to-existent right now because during the pandemic, a lot of them pulled out of the market and they're just getting back in. But gosh, the market's so hot, sellers don't want to sell to those guys right now. They don't need to.
Well, I mean, and a lot of people think that the iBuyers were taking up so much inventory.
They really weren't.
They really were.
Yeah.
What's the highest they ever were? Look at that.
I think it was like 4%.
4.6%, yeah.
Yeah, and so then we have investors that noticed during the downturn when the ones that were smart and had money were buying a lot more than what they're buying today. And I think the only reason that they aren't buying more today is because it's just inventory short and it's hard to get them.
Well, and door knocking in Arizona right now.
It's not the funnest. Not the funnest. We have second home buyers, and they've all been pretty consistent. But today we have record-breaking owner occupants, 83%, which is pretty exciting. I love the fact, and we're going to go into the next chart, Fry, please, because this is going to explain why.
Exactly. Okay, good. Well, and also I think that as people enter real estate, we're getting different generations that are leading real estate as well as entering into transactions.
Right.
And so you could start to see that because of affordability.
And that's the next slide is we're going into affordability. Yeah. So this slide here is talking about rents, which, okay, if you're a landlord, this is great news. But if you've never owned a home and you're currently renting, this isn't the best news.
Yeah. You
know, for the longest time, from 2000 all the way through 2013, 14, on average, you could probably find a pretty nice house at around $1,100 a month. No problem. I mean, for what, 12 years? You wanted a 3-bedroom, 2-bath home in town to rent? No problem. $1,000 is going to do it. If you could find it. $1,000 would do it, though. But from 2014 all the way up to today, we jumped from $1,100 up to $1,700 as an average rent.
And that is such a fast pace.
Oh, well, yeah, because we had
such a fast pace.
14 years of it being about the same, more or less. And then all of a sudden in the last 6 years, it jumped up exponentially. So this is a chart that, if you want to be investing, great news. Because hopefully you can get great rents on your properties right now, right?
Absolutely. Or even if you buy something to rent it out, a buy and hold strategy of just 3. I mean, I just flipped a property that I held for 3 years, and the amount of margin I made on that was ridiculous.
It was ridiculous. And then in the meantime,
I was renting it.
You're making good money on rent.
Yeah.
So the next chart, Fry, is going to show us, if you can slide down, this is the whole affordability.
This one was huge.
Yeah,
this one ties, right? That other piece and this one tie.
The whole presentation was fantastic.
Was really
That's why
good.
we wanted to share it with you guys. So the affordability we're talking about back in 2005, March, the average home, 1,500 to 2,000 square feet, back then cost about $250,000. The payment, because of the interest rate, was $1,332. So crazy. Same house today, cost you less. $1,291 a month.
Actually, a house that costs $100,000, almost $100,000
more. True.
Cost you less.
Will
every
cost
month.
you less every month because the interest rates are so much lower. They're half of what they were right before the market crashed.
Yeah.
So money's cheap.
Money's cheap.
Money's
cheap.
cheap.
I often think about people who've held properties from the distressed time frame.
Oh my gosh.
And how people were told they would never, ever, ever get
their money back.
Right side up.
Yeah.
Those people have totally.
Oh, yeah. I was the queen of short sales back in those days.
I know.
And
I think that's how I first met you.
Yeah, it was. We helped hundreds of people short sell their homes because they had to. They just couldn't keep up with their payments. They lost jobs. And that is something that is a little bit in line with today. There are a lot of people who've been affected by COVID. Again, why we want to talk about people who might have 401ks and options for them. So the next slide actually ties into affordability. Fry, if you can slide down just a little bit more. And this, again, kind of says the same thing, but just in a little bit different way. It shows how in 2006, we were not very affordable. We really weren't, because we had high interest rates and the prices hadn't come down yet. And then it went the opposite direction during the bottom of the downturn. Yep. But today, Phoenix is still more affordable than the rest of the country.
Yep. I love this too, because a lot of times we don't have like something to even measure what that is, right?
Right.
And for Tina to kind of lay out, like if you're between 60 and 75% of that cost, the population in terms of their median income compared to that was pretty cool too.
The cost of housing.
Yeah.
And that's what this outlines right here. So in general, we've always kind of beat the whole country.
The U.S., yep.
But in 2006, when things got real ugly, not so much.
That's what brought me out here. Living in the San Francisco Bay Area, I did a cost of living comparison. It was 22% less then. That was in 2000. And I mean, I've never turned back.
Well, you know, I'm from the Bay Area too.
I know.
And my mom still has a place up there, and they can't afford to live in the city anymore.
Yeah.
It's insane, the values there. Okay,
Mass exodus.
Mass exodus, and they're still coming.
They're still coming.
So slide on down one more chart for me, my friend Farai. He was really trying to get me to do this myself today, but we had technical difficulties before the show started.
I actually like the scrolling. It's super smart the way you set it up.
It makes it a lot easier, right? So this was Tina's synopsis at the end. And we just basically covered everything for the most part, just talking about supply, annual appreciation at 12.8%, the highest that we've ever seen. And how do we go from glut to housing shortage? It was the building of homes back in the day, way too many. Now today, not enough. And so, you know, for a buyer today, new homes are, if you're willing to live in the outskirts of town, those are some still great opportunities. What a great show. And thank you for joining us on our mutual journey to becoming unharmable and successful in all of our experiences while we're here in this school of life. We hope you enjoyed it. If you watched us on YouTube, please like and subscribe so you don't miss any future episodes. Likewise, if you're catching us on one of our podcast platforms, be sure to follow us so you never miss out on another one of our shows again. Remember that if you ever have a question about real estate or any of the other topics we cover, check us out on the web, www.gratefulheart.tv, for all of our links to connect with us. Otherwise, we'll have another show for you again right here next Monday at 11 a.m. Arizona time.
I'm on vacation every single day, 'cause I love my occupation. I'm on vacation every single day, every single day.